6 months. That's how long Chainlink holders have been waiting, watching every bounce fail, watching hope disappear with every lower low. But something just happened in the last 48 hours that has our attention. And it's not just price, it's what's happening underneath, in the structure, in the momentum, in the volume, all starting to align in the same direction at the same time. Is this the moment Chainlink stops bleeding and starts moving? We're going to show you exactly what we're seeing across multiple timeframes and let you decide. The levels are clear, the risk is defined, and if you're early, that's where the edge is. Let's get into it. We start with market structure. Why? Because higher timeframe structure gives us market context, which influences our decisions as we drill down. The bigger picture shows us a major high for Chainlink was made on 22 August 2025 at 27.866, and from that high, a major sell-off occurred, giving us our current structural low on 6 February 2026 at 7.196. From a yearly perspective, Link made a high on 14th January 2026 and for many months has been trading on its low. But since 6th February, Link has made incremental gains, and we are now approaching the yearly midpoint. But before we do that, we want to zoom out further because there is information that is useful to us. This is a monthly swing chart, and what it is showing us is that the 6th February 2026 low is significant, and that's because it broke multiple lows. Of most significance is the low on 5th August 2924 at 81.121 and that flash low on 9th October 2025. This gives us an awareness of how important the 6th February low needs to hold. We know we had a steep and deep decline from the 22 August 2025 to the 6th February low, but that is where we are seeing a change. Link made a high on 16th March at 10.069 and a low on 29th March at 8.214. And here's where it gets interesting. In the last 2 days, we have broken the 16th March high. This tells us after months of downtrend, we now have a weekly swing uptrend shown by the higher high and a higher low. Let's take a look at our proprietary price action momentum indicator. And yes, we see this fired a buy alert on 13th April. We now layer on our Fibonacci zones. Our Fibonacci support zone sits between 6.369 and 6.536, and our Fibonacci resistance zone sits between 13.304 and 13.431. As long as this 29th March low can hold, we are safe taking a buy trade. A quick look at the Ichimoku chart, and our TK cross occurred in the early part of this week, and yesterday was confirmed by a strong bullish engulfing candle push above the flat clouds. The Chico span is virtually pointing up. What are our volatility and strength measurements telling us? Like we showed in yesterday's Ripple video, if you haven't watched that, we leave a link above and in the description, we are seeing compression. If you look at the monthly ranges, we have gone from 5.40 to 2.87 to 1.85 to 1.45, and this current week we are pushing higher at 1.53. This is exactly why we produce videos like this, so you get an early heads up to profit from early moves with controlled risk. The other measurement tool we use is the close strength. This simply measures whether we are closing near the high or low, and this month we're closing almost 89% near to the high. That's another bullish sign, as we recorded this video 1 day before the weekly close. Before we give you the scenarios that may play out, we will take a look at Chainlink from a volume angle. The anchored weighted volume profile gives us a yearly volume perspective. Here, we see Chainlink trading above its 2026 volume, which is a good sign for bulls, and 2025 is considerably higher. It could be that prices are being drawn like a magnet to the 2025 reading. Right now, Chainlink, we are seeing multiple signs of wanting to go higher. We are early on the move, which helps us keep our risk low. The monthly compression is starting to turn, and we would want to see a combination of higher ranges and that close to high strength increasing. For the bulls, we would want to see several closes above the 2026 yearly mod point at 10.756. This is our first landmark. Buyers have control as long as they can stay above the 2026 anchored VWAP and above the Fibonacci support between 6.369 and 6.536, and it must also hold the swing low 29th March low at 8.213. If this happens, Link is showing signs of transitioning out of this compression structure and into a stronger recovery phase. Our Fibonacci resistance zone is a potential level to lock in a proportion of profits off between the prices of 13.304 and 13.431, and let a proportion run into 2025 anchored VWAP. These are the key levels and structures we are watching closely. We hope this video has helped you. If you want daily Bitcoin and crypto analysis, subscribe to Crypto Trading Mastery and join our free crypto trading newsletter linked below. Thanks for watching, and we'll see you in the next video.